You ever wish you could just peek behind the curtain? See what the big institutions, what everyone calls smart money, are really up to inside every single price bar. Well, guess what? That's exactly what we're going to decode today. Let's dive right in.
All right, let me ask you something straight up. The markets have evolved, right? I mean, they're faster, they're way more complex, completely dominated by algorithms. So the real question is, have you?
So here's the hard truth, A lot of traders are out there using strategies built for a market that just doesn't exist anymore. Relying on old, lagging indicators, that's like trying to navigate this insane algorithmic superhighway with a crumpled-up paper map. It's just not going to work. You're completely disconnected from the real flow. And look, the goal isn't to beat the institutions. You can't. But what you can do is see their footprints and follow along.
And this is where it all clicks. Look at this. On the left, you've got your standard candlestick. Sure, it gives you the open, high, low, close, but that's about it. Now look to the right. That is the order flow view. It's not just a candle. It's like having X-ray vision. You're seeing the battles, the negotiations happening inside that price bar, showing you exactly where the real money is being thrown around in real time.
Okay, so you've got this incredible X-ray, but how do you actually read it? Well, let's break down the anatomy of an order flow candle piece by piece.
First up, we've got the volume cluster. So think of a normal candle as just a black box, right? Well, this cluster, it basically cracks that box wide open. It shows you the nitty-gritty, the exact buy and sell volume at every single price level inside the candle. If you see the numbers are all spread out, that's high volatility. If they're all bunched up and tight, that's low volatility, prices consolidating. Right away, you get a feel for the market's mood.
All right, next, look right at the top of the candle. See that number? That's the total delta. The easiest way to think about this is like it's the final scoreboard for that candle. It answers one simple question. Who won? The bulls or the bears? It takes all the aggressive buying and subtracts all the aggressive selling. If the number's positive in green, boom, the bulls won. If it's negative in red, the bears took control. It's the fastest way to see who's in charge.
Now let's look at these horizontal bars. These are the volume levels. The green ones show buying pressure, the red one shows selling pressure. Think of these as showing you the effort. They pinpoint where the real action, the heavy lifting, actually happened. If you see a really long bar, that's where a huge battle, some serious negotiation went down.
And if you want to get really granular, we've got the delta levels. So the colored bars give you the general vibe, right? But these numbers, these tell you the story of the micro battle at each and every price tick. They give you the exact net difference. This is how you can pinpoint the exact moment where buyers finally overpowered sellers or the other way around.
Okay, so that's a single candle. Pretty cool, right? But one candle is just one soldier. How do we use this to see the whole war? We need to map out the entire battlefield, and we do that by finding the key levels of control. So the most important landmark on our entire map is this yellow line. This is the Global Point of Control, or POC for short. What is it? It's the single price level where the most volume, the most business has been done for the entire session. It's like the market's center of gravity. Price just loves to hang around it, get pulled back to it, and react off of it. It's a huge deal.
Then we have these other lines, the green and red ones. These are the local POCs. Now, if the big yellow line is the capital city, think of these as the territorial lines drawn in the sand. Each one marks the highest volume spot from a single candle in the past. Green means buyers won that territory, red means sellers took it over. And what's amazing is when price comes back to these old lines, they act as super precise support and resistance levels. It's incredible.
All right, now for the best part. We've got the theory down. We can read the map. So let's turn all this knowledge into 2 actual actionable trading strategies you can use.
This is where the magic really happens. You take your map, all those POC lines, and you combine it with what's happening right now. By watching the volume and the delta spike as price comes up to one of these key levels, you can practically see the market's intention. Is it building up steam to smash right through, or is it about to hit a brick wall and get rejected?
So, strategy number 1, the breakout and reversal. It's a simple 3-step process. Step 1, identify your key levels. That's your yellow global POC and all those red and green local POCs. Step 2, monitor the price. Just watch it as it gets close to one of those lines. Then step 3, confirm the trade. This is where you watch that real-time delta. If you see a massive spike in buying, that's your breakout signal. If you see a huge spike in selling, get ready for a rejection or a reversal.
Now, the second strategy is, well, it's fascinating. It's all based on something called a volume gap. So these are spots where price moved so fast that it literally skipped over price levels, leaving behind an empty space, a vacuum. And there's this weird kind of market physics thing that happens. The market hates a vacuum. It almost always wants to snap back and fill that empty space.
So how do you trade this? Well, these gaps get projected right onto your chart as volume zones. Your job is to anticipate that snap-back effect as price comes back to fill the zone. But, and this is a huge but, here's a critical warning. This is not a standalone strategy. You only trade these gap fills when they line up with the overall market trend. You do not want to be fighting the current just to get you a little snapback. That's a losing game.
Whew. Okay, we have covered a ton of ground. So how do you pull all this together and actually use it to get an edge? It all boils down to a super simple checklist.
And here it is, your 4-step order flow checklist. Number 1, context. Check that total delta to see who's winning the fight. Number 2, key levels. Map out your battlefield with the global and local POCs. Number 3, strength. Look inside the candles at the clusters and levels to see how much effort is being used. And finally, number 4, opportunity. Hunt for those volume gaps that are moving with the trend. That's it.
Look, at the end of the day, no tool can predict the future. That's just not how this works. But what order flow gives you is something that's maybe even more powerful. It's a tool that lets you stop guessing and start seeing what's happening right now with incredible clarity. And in these markets, seeing the present clearly, well, that's the ultimate edge.